Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Wednesday, it's the 14th of June. My name is Russell Shaw, Senior Market Specialist at FXCM, and my email address rshaw@fxcm.com. Just going to go ahead and bring up the disclaimers. We'll start off with a high-risk investment warning. Hey, Zanetta, good morning to you and welcome back. Okay, here is the market commentaries disclaimer. And we'll use MarketScope 2.0 and TradingView.com. Want to take a look at TradingView, want to take a look at the inflation. This is the United States core inflation, CPI, came out yesterday. I think it's interesting just to see that the moving averages have crossed down. So that's something just to take note of. And I just want to keep an eye. On this rate of change. The rate of change is below zero. As long as we stay below zero, there is some sort of deceleration, and we want to see the core inflation come down effectively to around 2%, right? It's just fixing up my there we go. All right, so you can see this the rate of change here is under zero, and the moving average has crossed over 5.3%. It is lower than the previous month's 5.5%. What you're actually seeing here is called a base effect. Seeing a base effect. In other words, it's year on year, right? So they're going all the way back a year. Well, a year ago, inflation was already high. So high inflation on a high inflation is not that malignant, so to speak, as opposed to if you had a low base effect. What's interesting is the headline inflation rate. So let's just bring up headline inflation. All right, so we're just, instead of the core, we'll take a look at inflation. And here is a big movement down. It's gone down to 4%. Well, if we go down to 4%, now that's the lowest since April 2021. So it's really moving down. The rate of change is angling on the negative side. It's angling downwards. So the headline inflation is looking impressive. We just got to see the core inflation, which is strips out the volatile items. In other words, there's no effect from food, no effect from energy in the core. So we want to see the core come down as well. What's interesting is the month-on-month figure. The month-on-month figure for headline was 0.1%. Okay, so if you annualize 0.1%, sorry, let me just bring that up again. If you annualize 0.1%, it comes to, because remember it's compounded, so it comes to 1.2%. Comes to 1.2%. Could make it 1.21%, which would be under the Fed's target of 2%. So the month-on-month is now looking quite benign. On the headline side, the core is still 0.4%. So if we have to annualize the core, it's still too high. It's around 4.9%. So if it's at 4.9%, we've got to see it drop down to 2. But I think the fact that headline is coming down, I think that we do get a pause. I think we get a pause in the Fed rate this evening. And if we carry on seeing the trend as is, if we carry on seeing the trend moving in this deceleration tendency, I think that we could be at the apex of the rate hikes. So let's just keep monitoring that. And with that said, let's just bring up our US dollar and do the analysis from the US dollar side. Okay, that's better. My system's just running a little slow today. I beg your pardon. There we go. All right, taking a look at the US dollar, we know that it's moving in a sideways direction. The fact that the inflation rate came in softer than expected, well, do we start seeing this dollar move towards the lower boundary? Let's go through to the daily chart. And you can see that the daily chart here is in zone 3. Okay, it's in zone 3, and there's a bit of a buying tail here. So perhaps there is a rally in the downtrend that is potentially exploitable. Let's go down to the hourly here. All right. So if there is a rally, basically what we're looking for is something like this. 1, 2, 2, 3. So we're right at the central pivot here. So the central pivot is our first area of resistance. Let's just draw in a resistance rectangle here and see what we get. So here we're right at sort of a resistance level. There could be an influence here from the central pivot as well. And let's go ahead and put on a Fibonacci as well, just to get some sort of idea of how deep the pullback is. So it's just about a 50% pullback. So there is a 50% retracement. There is support that's turned into resistance. That's called the principle of polarity. And we've got the central pivot acting as resistance. So this is an area to keep an eye on. In other words, are we going to get the next impulse to the downside? And we don't want to predict here. We don't want to predict. What we want to do is, hey, Howard, morning to you. Nice to have you on the webinar. We don't want to predict. Okay, we want to get some sort of signal and then react to that signal. So the way that we do it on the webinar is we use two tools with a filter, and the tools are the exponential moving average, which is a 5 and a 10. The green's the 5 exponential. The 10 is the 10 period exponential moving average. And what we want to see is we want to see that cross to the downside if the zone 3, if the weak zone has any influence over what the dollar is currently doing. So we want to see a cross to the downside, but we also want to see a trigger 2. What's a trigger 2? Well, a trigger 2 would be the stochastic crossing to the downside. Okay, we want to see the cross. So two things need to happen in terms of triggers. We need to get the exponential moving average pushing down. We need to get the stochastic pushing down. And then the filter will be the stochastic making its way down to the lower quintile, that's 20 minus, and holding there. And if we get that, then potentially we get the zone 3 influence. Then potentially we're getting the fact that we've got this bearish reference candles, downside reference candle. Yesterday we did get a bit of a movement down, didn't we? So there was some swing there, but unfortunately the stochastic didn't stick as long as I would have liked. So we want to see if we can get the resistance to cooperate with the longer term trend analysis. Don't predict. You can see right now that the EMAs are in a bullish formation. You can see that the stochastic hasn't turned down yet, so we don't want to predict that the current levels are going to be affected by the overhead resistance. We want to see the movement, we want to see the signals, and then we'll move off of those signals. Let's take a look at Euro. Okay, so on the Euro side, we don't quite have the bullish reversal candle yet, so we can't put in the we can't take out the question mark. So it's still HT. It's still HT question mark. It's not HT. And what we want to see is if we can maintain in the zone 1, the bullish area would be between the upper red and the upper blue. Okay, so the fact that we've got a position in zone 1 and some red, perhaps there is a dip in the uptrend that we can take advantage of. Just like there is a rally in the downtrend on the dollar, we're looking to see if there is a dip in the uptrend on the euro. Let's just take a look at the hourly here. Okay, so again, we would look to see if there is a positive crossover, some sort of positive crossover on the exponential moving averages. Remember, it's a 5 and a 10. And what we would want to see is the stochastic start moving out of no man's land and start moving towards the 80 level. And if we start moving towards the 80 level, we want to also get the momentum there. So a little bit of let's call it ambiguity here, in that it looks as if the euro wants to make a bullish reference candle. We're not quite there yet, but we can see we are in zone 1. Is there going to be some sort of support here? And what we can do is we can take a look at the central pivot for support. We can draw in support level here. Okay, and then let's see if there's a triple confluence. So there should be a fib level here as well. Let's see where we are, and it's on that 50% as well. So euro really is being a mirror image of the US dollar. Okay, we just don't want to predict here, guys. What we want to do is we want to react. Okay, let's just take a look at two more. Let's take a look at cable, and then let's take a look at DAX. Okay, just bringing up the pound US dollar pair here. Right, just give me a moment. The system is really slow this morning. I apologize profusely. Okay, here we go. Here's the cable charts. Let's just go through to weekly. Now, it's a little bit more advanced on the cable side than on the euro side. You can see that we have the bullish reference candle locked in as of last week. You can see that there is some upside momentum with this week's candlestick. Go through to the daily. We're sitting nicely in zone 1. So we highlighted this trade yesterday. If you want to go through to the hourly chart just to see if there is some sort of dip here that we can potentially take advantage of. And what I would do is I would keep a lookout at the first support level would be the central pivot level, right? So we want to take a look at the central pivot here. Let's draw in our support. Okay, so a pull back towards the support level. I don't think the fib's going to give us much here. I don't think the fib's going to give us much here. Yeah. So I think that it's a double confluence, not a triple confluence. What we want to see is perhaps a pullback to the central pivot. And if so, 1, 2, let's make it like this: 1, 2, 2, 3, and then the push up. And then there's a push up. Okay. Howard, there won't be a crypto minute today. I beg your pardon. There won't be, but we will do one next week. All right, let's just take a look at DAX as the final chart. So yesterday we saw some volatility coming back into the DAX. Let's see if there is any opportunity for the for us on the DAX side as well. But you can see these from the dollar. There's a potential rally in the uptrend. Euro cable potential dips dips in the uptrend. Sorry, with the dollar there's a rally in a downtrend. With the euro and cable potential dips in the uptrend, and the cable pairing seems a little bit more advanced. Okay, so let's just take a look at DAX and see what's going on here. Again, we'll do a top-down analysis, and we'll start off with taking a look and seeing the seeing how it looks as if this might be a valid trend line. Okay, it's touched once, it's touched twice, and now it looks like it's going to hold the third time, making it a valid trend line. If it doesn't hold the third time, then it's just what we call a tentative trend line. And the fact of the matter is sorry, let me just, there we go. You can see that the DAX is in zone 1. When I mean what I mean by zone 1, the upper red and the upper blue. Upper red, upper blue. So we're in the bullish area. We've got the RSI nicely above 50, and there's some red, a little bit of red in zone 1. So let's go down to the hourly chart, and you can see that there's a potential angle and separation here. Okay, it's potential angle and separation. Take a look where the stochastic is. Stochastic's in the upper quintile. So it looks like we've got some good momentum as we start the day on the DAX, and it's reacting off of the central pivot. So we've got 1, 2, 2, 3, and now it looks like we may get the next impulse up. So keep an eye on this one. Put this on your watch list as well. All right, remember that any trades you decide, you must use risk management, you must use stop loss. Okay, that's where we'll end it for this morning. Apologies that the slides were a bit slow. I'm going to reboot the machine now. If there's any questions, go ahead and type those in. Any questions, go ahead and type those in, please. All right, nothing coming in. So what we'll do is we'll end the webinar. We'll end the webinar for this morning, and we shall reconvene tomorrow morning. Thank you very much, guys. Have a good day ahead and a good evening.